people that own businesses are probably have a business that could be valued under 10 million or even under 50 million, which gets us into this market that we're talking about. So maybe you could help us out in understanding like what is the definition of kind of the lower middle market and the deals that we're talking about for this conversation. And then what are you seeing happening in that market currently?
Yeah, sure. I think it's great because some of the people that I meet in the course of my work will come in with certain expectations or understandings that they've picked up from different media articles, books that they've read, etc. And they don't really get that things operate in a different way in different parts of the market for businesses based on the size of these companies. And here's the frustrating part: is I don't think you can really find anywhere definitive sort of break points between these different categories. The way that I like to describe the place where I do most of my work is in the main street, which I describe as businesses with a cash flow under 500,000 of EBITDA. Now, if you think about that, that could be a business with 10 million in revenue, but if their net is only 500,000, then they're in that main street space. So I call businesses smaller than that main street, and then I get into the lower mid market by dragging that line up to about a million, 1.3 ish of EBITDA. And what characterizes most of these businesses is that most of the time their owner is their primary manager. So you've got the presence of ownership in the business itself. They're often characterized by very limited layers of middle management. So the owner might be one person removed from frontline employees, or maybe two people, depending, right? But they're primarily what we might consider those family-owned businesses or small businesses with a few dozen or up to 50 or so employees generally. And so the ownership is often mixed up with some emotions when it comes to the business and how the business is run and how the deal might be made to buy or sell it. And so a lot of the times I kind of say it's like, if you want to compare it to the world of real estate, it's sort of like mixing up the numbers from commercial real estate with the feelings and emotions from the residential real estate. But you got kind of both of these things going on at the same time. And you've got people that are behaving or reacting to things, sometimes in a logical way, but sometimes in an emotional way. And so it can create an interesting kind of space to be doing deals between people.
Well, and I think that, most people don't really understand that there are different, I mean, we even talk about business brokers are dealing with make main street businesses, whereas investment bankers are dealing
Mhm.
with middle market and up. But for just so that everybody understands that there's different ways to deal with these different businesses. Now we're going to look at businesses that are more in the small business realm that probably people can relate to. And I like how you're talking about profitability, because it's really kind of under this $1 million of EBITDA that we're seeing people. And profitability in this space is going to drive things probably a little bit more than revenue or the size of the revenue. But a couple other things I think are that people in this space, if they're the primary wage earner, they're the primary, owner of the business, typically are going to think that their business is worth far more than it may be worth on the open market, right? Because
Mm.
they're just kind of have a perception of, maybe I could get 10 times EBITDA, like I'm in a hot industry and this industry is going at 20 times EBITDA, like they're seeing these big deal numbers, but it's sort of a misappropriation of the multiples to the process.